How's it going, everybody? Brian Hoops here, Midwest Market Solutions. This is our closing market commentaries or internet TV video series here, and it's Thursday afternoon, October the 19th. Thanks for joining us. This is a chart of soybeans. Notice how we're in a nice solid uptrend, and we've got fundamental news to support this solid uptrend. Today there was sale 384,000 metric tons of soybeans announced to China. That gave a real supportive feature early in the morning hours. Our export sales, certainly a supportive feature, around 46 million bushels for soybeans, around 50 for corn, above expectations. And even wheat was a good number, about 22 million bushels. Wheat's really been the laggard here this year. In our newsletter in the morning, we'll have year-to-date comparisons to last year's export business. So we've had some export business in the last day or two. It helped to firm us up. Notice this support area. This is a continuation chart looking at November beans. We had anticipated a pullback to 984. We came and kissed it a couple times and started to move higher. I think as long as we don't go back and break through this 981 3/4 area for support, the funds are going to stay committed to the buy side. I don't think they want to turn and go back to short. They want to cover short positions in the fourth quarter, build a long position, and as long as this technical trend stays firmer, we're going to see that be the case with funds short covering. Corn, really not much of a difference in the charts. We're just sideways here. We've got a line drawn here at 344. We can draw another one on this chart, maybe up here right around 358. You know, this market stayed within a 14-cent range for almost 2 months now. It's going really nowhere, and doesn't appear to be any reason to change that direction. Kansas City wheat, you know, we're in that kind of same ballpark here. We're at the bottom end of the trading range. You can draw some support down at the 424 area, and the same thing. You've got very little time we've spent anywhere above 450. We spent just a few days above it, but we're in a 25-cent range there. So we're going nowhere fast in a lot of these markets, and traders kind of losing interest in some of the grains. Other news, we're looking at harvest data, continuing to hear pretty good yields. A lot of producers got some overruns. They're going to go ahead and market that, so to pay big storage charges. And we've got some option strategies to allow you, if you are making sales, to re-own these sales. All right, looking at cattle market here. We are seeing uptrending market here in the cattle. This is December cattle. Yesterday we bounced just near this uptrend line support. Trend is in danger of being broken here, though. Slipping below this indicator, slipping below Wednesday's lows would be an indication of change in the technical trend. There was some cash trade at 110, but very limited, not enough to make the market, certainly. And that 110 trade is down about $1 from a week ago. That's why the futures were weaker today, as the cash did not come up. I said this morning I thought the Packers would kind of lay in the weeds and wait until after the cattle and feed report. The reports expect to be bearish with big supplies, big placement numbers, and if it's a bearish report, that's when the Packers will step in and try and buy cash at cheaper money. All right, hope this helps you out. Hope you had a great day, and give us a call if you have any questions. Any of our officers will be glad to talk with you and assist you. This has been Brian Hoops. Have a good night, and talk to you again soon, everybody.